What's going on, everyone? Sal here, back again with another video. And today I want to talk about where the market is going with the SPY S&P 500 Index ETF, ticker SPY, most popular ETF on the exchange. And folks, I mean, you want to talk about a run over the last week and a half. It's been a monster trade. And that Monday, April the 6th, caught a lot of traders off guard, including me. But we understand that this is an inflation-based economy. It requires that asset prices continue to go higher and higher and higher. We have 205 million 401ks that need to go in one direction, higher, right? Our economy doesn't work without asset prices going higher. So the Federal Reserve, because of this coronavirus situation, has pumped billions, trillions of dollars into the stock market to do one thing: create higher asset prices. And I think that it's finally hitting the spot, ladies and gentlemen, and it's doing what it's supposed to do, which is send asset prices higher. Now, I thought that it wasn't working, and for a long time it wasn't working, right? I mean, we were told that $5 trillion had been pumped into the market, literally 4% of US GDP. That was almost 2 weeks ago now, and we hadn't seen that pop yet. And we saw it on Monday, folks. I don't believe at all that it was quote unquote peak week, or the fact that deaths were quote unquote subsiding in New York and New Jersey. We had some of the worst numbers today. So obviously that puts that peak week talk, out of question. Irregardless, folks, we had the adults come back into the room with the 275 rejection. We're still above the 10 moving average, which on my last video on the 25th, I mentioned you had to go long here because that was an incredible move, off the lows for us to go back to bullish territory on the 10 moving average. It just goes to show you how hungry, right? How incredibly hungry traders are for higher prices. And they understand that the federal government has their back. So they're willing to risk significant amounts of capital to let the Fed do its thing, which is to send us higher. This is billions, trillions of dollars that they are looking to reclaim in wealth because it was lost thanks to the coronavirus. So I would not fight this, folks. I would not fight this. This is not something you want to short above the 10 moving average. We want to short, we're going to look for 2 consecutive closes beneath the 10 moving average. So right now, if you're not long, you need to wait for a green day to get long again. So either we're going to get close to this and we're going to get a green day, or tomorrow we're going to get another green day or something, or a sideways day or sideways move. I would not short this market. There's so much desire for higher prices because our economy does not work below 200. All right. This SPY, it just doesn't work when we go low. Are we in a recession, depression? If the numbers play out the way they are right now, yes, it's clear that we're in a recession with as many jobs as being lost right now. But with the money that's being dumped in the economy, folks, they will create the value necessary to make it look like on paper we are not in a recession or depression. We could be in a situation where it had 20 million jobs lost and be right back at all-time highs. I mean, that you can do that. If you print enough money, you can do that. And that is why I don't want you to be caught on the wrong side of this trade trying to short this if we don't get there. All right, if we don't get there. I mean, obviously we know that March 23rd low. We still got some interesting support that was somewhat created here over these last couple of days. At that 243 level, that should be an area where if we come back to test, buyers will try to come back in. And they'll be looking for assistance there. But 255.70, where the 10 moving average is now, is where we're looking to see 2 consecutive closes again. Once we get that, then we can say, okay, there's the high probability short to, possibly lead us down into a bottom retest. But until then, folks, I mean, if you've been a put seller since we climbed above that, I mean, you've made some decent profit, over the last couple, at least week and a half. All right. So what do we do for the future? Again, stay long. If you're not in my Iron Condor program, I definitely suggest, if you don't know or you don't have a trading strategy and looking for a trading strategy, visit my website, nodirectiontrading.com. In this situation, we are 30, 45 days out, right? So we're far away from the price action, right? Minimum 90% probability trade. So we're not even close to the market right now. We're still at the 290s, 285s. I put out some short trades. We were 2 in a row. We actually got tested today. We got tested today at that 266 level. We're just beneath that. We'll see what happens with that. But folks, the desire, right? Everybody wants to go higher, right? Everybody wants to go higher. And I don't want you to miss out on the opportunities to make a whole lot of money with the Federal Reserve and the federal government giving you easy money, right? It's bad for us, right? It's bad for us, but you got to do what you've got to do, which is grow your trading account. And growing your trading account means, trading with the market, right? And going with the sentiment of the market. And the sentiment of the market clearly is demanding higher prices. So we'll find out whether or not this 275.40 level holds tomorrow and over the next couple of days, or is this the beginning of a very, very ugly, move lower to retest that bottom level, right? Personally, I think we go sideways and we break out of this because the market doesn't care. The fact that we are 3 weeks, possibly another 4 weeks from today, from actually being able to leave our homes and going back to not, market as usual, but somewhat like what we had. We could literally, as I said, have 20 million jobs lost and be at all-time highs. We could literally be there again. And I don't think anybody would be against that for the most part. I don't think anybody would be against that. There'd be a lot of shorts who'd decry how, rigged the economy is. But again, you have over 200 million 401ks who have to have higher highs. These people are dependent on that. This baby boomer class of 79 million Americans over the age of 60 who need that money. All right. They need that money. And the federal government is going to do anything to please them. And if that means selling out your grandkids' education, then so be it. And I'm not trying to sound like a pessimist. I'm just being honest with you. They're going to do what they got to do. And we as traders have to adjust accordingly. It's your boy Sal. Until next time, take care.